Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for Monday, December the 19th, 2016. I have reason to believe that the powers that be are having massive infighting right now. One side wants to do one thing while yet another wants to do something altogether different. We're seeing this spill over in the mainstream media with the fighting surrounding the outcome of the election. It seems that Hillary's camp wants to do everything in their power to overturn the election so that she can be president. In addition to that, prior to the election outcome, Mr. Trump said that he believed that there was rigging involved and some other conspiratorial events surrounding the election itself prior to voting day. Hillary, in her camp, basically called him a quack and a conspiracy theorist, and that by him doing that, he was undermining the integrity of the USA's voting processes. Now, after the fact that she has been declared the loser, she herself now is claiming foul play and conspiratorial events and rigging and everything else. So it's funny how she was the one laughing at him in the beginning, saying, it's foul play, it's a conspiracy, and now she's the one touting the conspiracy. So it seems like if that tantrum is not successful, the next thing they can do is punish the Trump establishment with, wait for it, a market crash. But this is manufactured because there's nothing on this chart that screams sell or short or bear market. Nothing. Nothing at all. You're looking at a chart of the Dow futures and it is a screaming bull market. There's nothing bearish on this chart. Any correction that comes after today in the financial markets, in the global markets, especially starting in the USA market, is manufactured. They've even gone as far as, I saw one video on YouTube where they compiled all these different quotes by billionaires and people that run the central banks and things of that nature, warning about the market. How can you warn about something that you yourself have pumped up, that you yourself are participating in, unless they're giving the elite clues and cues that they're about to bring the thing down temporarily for whatever political purpose? So I just want to put it out there to my listeners, my subscribers, that if you see anything happen in this market on the corrective side, that it is more than likely nefarious in nature, and it is being contrived and done on purpose to frighten and to scare and to intimidate and to twist arms into some political form or another. There's nothing bearish on this chart. Yes, markets do ebb and flow, just like you see here on this chart. You see ebbing and flowing, ebbing and flowing, ebbing and flowing, correcting, pulling back, breaking out. This is a normal market pattern for price action. Okay, price action is supposed to do things like that, but not crashing and burning like they're talking about. They're doing some really major fear mongering. They're going over time with this fear mongering and calling for a collapse of a market. And it's funny how Wall Street likes to call for these things at the end of something. Like when you're at a top, they're telling everyone to come into the market, and when you're at the bottom, they're telling you to sell everything. It's always the opposite of what you need to be doing. Right now, you're not hearing them telling you to come into the market. You're hearing the opposite. They're scaring people and frightening them from participating and getting into the market. That's because this bubble is nowhere near started. Dow 20,000 close by the end of this year, and that's just how it is. And then next year, all bets are off. We'll probably go to Dow 30 or 40 or 50,000. And they don't want you, the little guy, to participate. Do you think they would really warn you and tell you of something? No, they wouldn't. They're not that nice. All right? So understand that. You are being played and duped, and they're trying to frighten you. Yes, a corrective, healthy pullback at some point is healthy and necessary for the markets to continue their bullish climb. But all the fear mongering, you have to ask yourself a question: why? Why are you hearing this? Why are they telling you this? There's a reason for it. On the flip side of things, let's take a look at gold. They've been laughing at gold stackers. They've been laughing. They've been saying that you have it all wrong, you've been wrong, and basically you're an idiot and you're a fool if you think gold has any intrinsic value. They're also saying that you also that are more heavily persuaded towards silver are just as foolish as the average gold bug because your precious metal holdings have no real intrinsic value and you're just wasting your time and money, and ha ha ha, the powers that be are going to keep crushing this market down. Understand two things. The first thing is that gold is a hedge against inflation. The second thing is gold and silver is money and nothing else. Gold and silver is money and nothing else. Gold and silver is money and nothing else. All right? Those are the two things you need to understand. This is the paper market we're looking at. This is the gold futures. Now, this does, unfortunately, set the price for the physical. But this is where the shenanigans take place because they can't really do it with the physical. But you can definitely do shenanigans with the paper markets. And this is where you and I come into play because this is their playground. And as bullies on the playground, you knock people out. When they're swinging on the swings, you come from behind them and you kick them in the tush and they go flying off of the swing head first into the sand. That's what bullies do. When you see the kiddies in the jungle gyms, what do? You make them fall down and hurt themselves, and then you laugh. That's what bullies on a playground do. So what we must do to turn the tide against the bullies is to operate in their sandbox, go on their playground in vast numbers, and whoop you know what out of them. That's what we do. So the traders come in and we say, okay, I see you're pimping this. I see you're knocking this down. I'm still holding my physical. I don't care if the paper price goes to zero. I'm not liquidating my physical holdings. You're not going to frighten me and brainwash Vulcan mind meld me into delivering you my physical. We're going to just go ahead and go long the paper. While they're crushing the price, we go long the paper. What do I mean by long the paper? We go long the DGLD, the DSLV, we go long the JDST, we go long the dust. That's what we do. That's how we roll when they do this to the physical price of the commodity. We can even go more hardcore and say, okay, fine, I'll just sell short the futures. We can do that too. Why? Because we trade. We understand the game is rigged and what they're doing, but we use that to prosper ourselves and our families financially. All right? At some point, this is going to self-correct because that's what price action does. That's how we got this here, this base, that it created this run. Another one will happen again. If all things being equal, and I think they are, that this support holds, the next support should be right about where we are now before we get up into the Kumo cloud and into these ramps and off to the races. We might not see it by the end of this year, but going into next year, we should be into that process. Now, we don't know. Generally, you cannot really call tops and bottoms because you don't know. Within a trend, you don't know where the train is going to stop. But we could look at all things being equal where we've been to get an idea where we may be headed. Now, we do have a bearish cross of the shorter term trend line crossing below the longer term trend line, and the price of this is starting to get into the Kumo cloud. At this stage, it does look as if it will drop below the Kumo cloud with price. If that happens, then we're in a full-fledged bearish scenario of which this support here will more than likely be taken out. If we go back here, and just remind you, we're looking at a weekly chart. This is a weekly chart. All right, so bear in mind, excuse me, when the trend lines are below the Kumo cloud like they did here, see, we're below the Kumo cloud, okay? It's hard to say where the market's finally going to bottom and find that support until it does it. Here, the price action led the way, and then the trend lines caught up and began to follow suit. It can stay below the Kumo cloud for some time when those bear market patterns form, like we did here. You see how long it stayed below that Kumo cloud. Okay, so we don't know. Is this what we're starting to see? Is this the beginning stages here? That's the question. We don't know. We have to wait and see what transpires. It's going to be difficult to tell for right now. Is the run over, or are we going back to bearish? Hard to say. As stackers, you don't want to see that. If no one wants to see price destruction and distribution, you want to see it on the upswing. So we'll wait and see. Chances are, though, the higher the stock market goes, generally speaking, in a normal market environment, you would see the metals continue to plummet. But because there are other economic realities in play, I believe still that the price of gold and silver are going to accelerate 1,000% from where you see them at today. Period. I have not changed in my overall perspective or outlook for these metal prices. Taking a look now at the silver chart, and while this is loading up, just keep in mind too that this week specifically, it's a holiday week. It's Christmas week, so expect much lighter trading volumes for the most part. Really, no one's home. Everyone's out shopping and stuff. There's no one sitting in front of their computer trading. I doubt if even I will get a trade off this week. I'm watching it. I'm going to wait and see, but it's hard to say if there will be a trade to be had this week. Now, I will say there is a very high likelihood of a trade getting put off for next week. But the way it should play out is the trade should come earlier than the week, something that you get to ride until the end of the week. Now, as far as anything that has to do with taxes, you need to seek out your accountant or tax professional, because I have nothing to do with that. But some of you will probably be weighing, should I take profit, the last trading day, business day of this year, or carry that over to next year, whatever. I can't advise you on that. I have no idea. All I know is what the charts say and what the algorithms are suggesting, and then I move accordingly. But you will have an opportunity, you should have an opportunity to take profit on whatever price action happens by the last trading day for next week. So there will be a small window for that. There's possibly a small window for that, all things being equal. If not, then we'll just have to stand aside another week and wait until the first of the year. It's just that simple. And that's not a bad thing. It's good to be able to take some time off and push back and, reflect and spend time with your family, friends, and loved ones. That's a good thing. But as traders, we always have an eye out for profit. And if you've had a pretty good year, and then you go out on a high note, it's great. If you've had a slumming year, don't try to overtrade and make something happen to try to you know win back something, because the last 2 weeks of the year are very thin, and there's almost hardly any activity. So don't get yourself caught up. Just trade what you see if there's a trade to be had. Other than that, man, just stick to the pulse waves. Let the pulse waves guide you. If you don't see nothing getting triggered in the pulse waves, then you don't need to be in the market. It's just that simple. All right. So with that said, let's take a look at where JNUG may be, because people have been asking me about that. And then there was something else I need to think. Someone asked me. Oh, I think I know what it was. Let's see here. I think I know what it was. It's not coming up. Let's see. What is this? Uh, is it this one? FFMGF, I think it is. Alright, we'll go with this. Alright, as you can see here, this is a pretty good example of what I was talking about, following and then getting up into the ramp. This one is moving along just the way it's supposed to in a normal situation. And you see the support is above the Kumo cloud, and as we move out into the weeks on this weekly chart, here's the ramp and it's ready to take off. This is a nice looking candidate. So this is FFMGF. So First Mining Finance Corp. Nice looking chart from our perspective. And if you take a look at where we've been, yes, this thing was at 19 cents back here. Yeah, that's pretty amazing. 19 cents. All right, and now here we are at 62 cents. That's pretty cool. After hitting the high of $1.02. So this one's on and rocking. It should be a $2 stock easily by sometime in January, all things being equal, the way this thing is rocking. All right, and then now let's go to JNUG. JNUG is hitting some pretty low levels. Here we are at we hit $4.11 and closed at $4.24. It's not done falling yet, folks. So it's just not done. Now, technically speaking, it is now officially a quote unquote $5 stock, meaning it's a stock trading below $5. So technically speaking, a stock trading below $5, you have to do your own math and risk, and you just basically back up the truck and you buy it and you hold it from here. What are they going to do? It's not going to zero. The mining sector is not going to zero. It's not, the whole entire sector is not bankrupt and out of business. So the stock is not going to go to zero. Can it go to 20 cents or something? Of course it can, but it's not going to stay there. This is a 3x leveraged ETF. It's not going nowhere. If anything, what they'll do normally at these low levels is they'll do a reverse split. So they'll reprice it from $4 to $30 a share. If you had 100 shares, they'll say you now have 50 shares at the new price of $30 a share. All right, so don't look at it and be, oh, I'm rich. I was long at $4.24 and they repriced it to $30. Oh my goodness, what a run. No, they reprice it so that you still have what you have, and that's it. It's just repriced, that's all. You're still where you were in your position. If you're up 20 cents before they do that, you're still going to be up 20 cents. It's not like that. So it just gives you an opportunity, to do what you do. The stock is at a higher price. They keep doing that. So that's probably what's going to happen. So what it does, though, it does give you a situation when you're at all-time lows like this. You can accumulate more for less. So even if they are going to do a reprice, if you can afford to go in and buy 1,000 shares right now, then you would go in and buy 1,000 shares. And on the reprice, if they say, okay, it's now $30 stock, then okay, they're going to cut you. Instead of 1,000 shares, you'll have maybe 500 shares or something like that. Okay, fine. You got a $30 stock, 500 shares of a $30 stock that you wouldn't have been able to afford to do at $500 a clip. I'm sorry, yeah, 500 shares a clip at $30 a share. You can do it at $4 a share. So this is a good time if you're thinking to plan it like that, to go in there and do it right now. The next thing to look at here too is UVXY. If you do believe with all your heart that some kind of a stock market implosion is coming, here we are at $8.21. This is almost trading below the $5 threshold. You could go in and start doing something with this now, but I would keep my risk. I would keep my stop at $5, because if it goes from $8.21 to $5, chances are it's going to keep going and dropping below the 5. You don't know where it's going to stop. So that's just an idea to play it. It may not be ready yet because you don't see the stock market correcting. So this right here is nowhere near ready to do something like that until you see the stock market correcting. But this is just something to point out. It's getting low. If you can swing this at $8.21, go ahead and buy yourself 1,000 shares, 500 shares, whatever. See what happens. But no, 9 times out of 10, they're going to reprice this too. They've done it back here before. Remember when they repriced it to $30? So they could do that again. All right, they can reprice this thing again and again and again. But this is a all-time low point. Let's take a look at another one. Let's take a look at TVIX. Good old TVIX that only moved $3 during the Brexit. All right, TVIX is at $8.96. Okay, so they're both at the $8 level. UVXY though should move a lot better than the TVIX though, if something does get on and popping, because it's a 3X ETF for one thing. Let's see here. Let's take a look at the crude oil real quick. This video went way longer than I wanted it to, but oh well. Alright, here's the oil. As you can see here, it's still moving up on the weekly chart. Still not a lot to talk about here. It's just keep breaking out. It's bullish as can be. There's nothing bearish from the chart. So anyway, people, I mean, this is what it is. Come on over and check us out at pulsewavetrading.com. Learn how to make some money in these markets in the new year. Do yourself a favor, educate yourself, and come on over and learn how to operate in these markets. Learn how to hedge your portfolios, physical holdings. Learn how to play the game. Bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can and give nothing back. Peace. Events and rigging and everything else. So it's funny how she was the one laughing at him in the beginning, saying, it's foul play, it's a conspiracy, and now she's the one touting the conspiracy. So it seems like if that tantrum is not successful, the next thing they can do is punish the Trump establishment with, wait for it, a mark surrounding the outcome of the election. It seems that Hillary's camp wants to do everything in their power to overturn the election so that she can be president. In addition to that, prior to the election outcome, Mr. Trump said that he believed that there was rigging involved and some other conspiratorial events surrounding the election itself prior to voting day. Hillary, in her camp, basically called him a quack and a conspiracy theorist, and that by him doing that, he was undermining the integrity of the USA's voting processes. Now, after the fact that she has been declared the loser, she herself now is claiming foul play and conspiratorial events. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for Monday, December the 19th, 2016. I have reason to believe that the powers that be are having massive infighting right now. One side wants to do one thing while yet another wants to do something altogether different. We're seeing this spill over in the mainstream media with the fighting market crash. But this is manufactured because there's nothing on this chart that screams sell or short or bear market. Nothing. Nothing at all. You're looking at a chart of the Dow futures and it is a screaming bull market. There's nothing bearish